Okay, guys. So we covered last time. We covered a lot of stuff. We covered like how what kind of AI is used for academic research, how the AI is used for industries, right? We summarized like how investment companies using AI. We summarize how accounting firms using AI. So I give you guys like a practitioner's perspective, how this industry using AI, as I also discussed about some of academic research. So today we are going over to the 1.2. So basically overview the data we are covered for the whole semester. So I told you guys like what do business school contribute to AI game. So I told you guys we compete for normally AI we compete for 3 dimensions. One is the computational power, another one is algorithm, the third one is understanding of domain data. So basically from business school we don't actually really compete on computational power. It's not a physics department, and also we don't contribute too much on the algorithm development. What we want is we apply the existing algorithm for domain data, and in our case, how to apply the AI algorithm for accounting and finance data. That's what we're trying to focus on. So having said that, what does that mean is we are not just going to focus on help you guys to understand what data we are going to use and what's the structure of the data. So these are the things we're trying to cover. And so going over here, so if you look at all the stuff you guys read on the textbook, we split the data into structured data and unstructured data. So structured data is something you have learned, like income statement, balance sheet. These are the structured data, okay? So what is unstructured data? This unstructured data is it's a focus course, and including managers' narratives, including conference call, including press release, including images, including sometimes videos. When we interview CEOs, the videos can be unstructured data. So we are going to focus a lot on unstructured data, how to apply AI using them. And so I'm going to give you some like really snapshot or kind of what data we have in accounting and finance, and then we'll cover one by one following in the rest of semesters. So I will give you guys some like analyst report data, give you guys sample and how AI can do with that, and also patent data, and also loan data analytics, loan data, and also CEO compensation data. So these are the kind of example of the unstructured data I want to show you guys. And there's many abundance of the financial data we use in accounting finance, and AI can help us to analyze them. So analyst report. So what does analyst report? What you can have from there is you can get analyst forecast. So analysts can do what? They forecast, like say Microsoft, forecast Microsoft. Do you buy or sell, right? They give the recommendation. They also give the forecast of the earnings. And then they also give the industry overview. So in the analyst report, they give a lot of contents in their report. So you can get some structured data like this. But oftentimes the analyst report is unstructured data, which means what do you get with like this? So you can see that they give the Facebook, they write what's the understanding of the Facebook, the price pattern, and they give you this is buy or sell, like what kind of stuff, opinion on the Facebook. So you can see that this is very unstructured. It's very unstructured. We can make it structuralized, but the original information is very unstructured. And you can see they also give you the reasons to buy, right? It's not just buy or sell. They give you the rationale why you buy or not buying. So these are the important stuff we have to look at, because in the earlier world, we just look at buy or sell. You just follow analyst. But right now, using AI, use the GPT and Llama, what you can do is, what's the reason behind their recommendation or buy or sell? And analyzing that reason can help a lot for investment decisions and understand a lot of capital market. And also, they also give you the risk. They not just give you buy or sell, they give you what's the risk the company has. And these are all unstructured data, just a very small snapshot of unstructured data you can use GPT and AI to analyze. But the bottom line is we have to understand the contents first. Like you have to know the analyst report, give the reasoning to buy, and give the risk. You have to understand the contents first before you apply AI with them. Okay, this is that's why I told you guys the business school our advantage is not have strong computational power or we have proprietary algorithm. That's not our strength. Our strength is understanding all this domain data, and we know how AI can help us to extract what kind of contents from this report. And also there's a lot of figures. So there's a lot of studies showing that when you represent a numerical number into a graph and you analyze graph using AI, you actually get incremental information. Is that amazing? So what I'm saying is, if you just using AI to analyze all the numerical number, that's a scenario one. Scenario two is you present the numerical number into a graph, and you use graph analysis to analyze the graph instead of the underlying numbers. You get more information about the future stock returns, and then that's we call it future engineering, which means in the earlier stage, in the scenario one, the feature is the numerical number, right? So you're using AI to analyze the numerical number. That's the scenario one. Scenario two, why we call it feature engineering? We convert numerical number into graph. That conversion process is called a feature engineering. Means you believe just analyze the feature as a numerical number is not sufficient. You want to convert the numerical number into a graph, and then use a graph as an input to AI. So you can see the two cases. You either using AI to analyze the numerical number or using AI to analyze the graph, and we get better results from the scenario two. The reason because you have done the feature engineering by converting numerical number into graph, and that process is called the feature engineering. So when we say feature engineering, so who can do that? I think business professions will do that because we have the domain knowledge. We know how to convert the numerical number into graph. You are applying your accounting finance knowledge by saying what kind of graph we should convert, right? There's like a 200 numbers there. It's a panel data, 200 numbers there. What kind of graph we should construct from the numbers? So you use your accounting knowledge, you use your finance knowledge, you convert the numerical number into graph. That conversion process requires understanding of accounting and finance. And because of that, AI can do better job. So this is how you add the incremental value to AI. So this is something kind of difficult for computer science major to do that because they don't have the knowledge to convert that numerical to the graph. You need the accounting and finance knowledge to construct the graph and fit to AI instead of using the numericals. So you can see that analysts are doing that job, right? They are using the original number from the Facebook, and then they convert into graph. And we can use the graph as the input of AI instead of the original numerical number that helps AI to better predict future performance. So you can see that domain knowledge matters. That's why this course, we focus on how you apply your accounting and finance knowledge to the unstructured data instead of I train you guys to become programmer, right? This is, you can see the focus of the course. You can see focus. So we need the domain knowledge to get the graph, but it will help AI to analyze the company. And you can see that other examples, you can see they also give you like earnings quality, cash flow quality, operational efficiency. So the report gives you tons of information, not just give you the earnings forecast. They also give you the earnings quality, cash flow quality, operation efficiency. You can see that over time. So all this information you can get from the report, but you need AI to analyze them because they are kind of unstructured, image-based and the PDF-based. So you can see that they break down to earnings, cash flow, and the balance sheet evaluation. So a lot of information going on, and also give you a lot of graph and give you a rating for each of the dimensions we were talking about. They also give you the comparing analysis with peer firms. So they not just give you the information about Facebook. They also compare with the peer firms to give you the information, and you can get with that. So what I'm trying to tell you guys here is there's a lot of information like this on the market. Before GPT age, we just manually read them. How many reports you can read manually? How many? I know you guys are talented students. You can need 100, 200. But what we need is we want you to need 500,000 reports a day. It's impossible for human to do so, but it's feasible now. So we can have the GPT to process all the report, to get all this unstructured information from what I just talking about, the graph, the earnings quality, everything you don't have the access before. The AI can help you to construct all the information. And once we have that, you have the advantage as an investor. you have an advantage as a finance professionals and accounting professionals. That's the first example I want to give you guys. And also patent data is important. Sometimes what drives the economy? Innovation. Innovation drives the economic. But how we measure innovation? Patent is one of the most important one to measure innovation. So you can see that what patent data can have, you can see that patent data will normally have an abstract and title to give you what's the patent about, and about assigning, like who are using this patent, and the citation, how many people are cited, and the claims classification, is the patent about AI or climate or stuff, and the examiners, so who could kind of prove the patent. So kind of each patent is like auditors, right? Auditor have to audit the patent, audited the financial statements. The patent has to have an examiner to examine the patent and general information and the inventors, who invented the patent, and the maintenance fees and a lot of stuff. And also what's the market reaction to the patent, kind of proxy the value of the patent. So the patent has a lot of information here, not just beyond what you can think of, like who created, who are using it, and what's the value of it. And you can get the patent data from different sources. You can get a Google. Google has a patent database. You can get the United States Patent Trademark Office. You can get the Harvard. So there's different sources to get the patent data. So what's the original patent data look like? They're also unstructured. So you can see that they tell you the inventors, they tell you the assignees, the notice, the dates, blah, blah, blah. This is kind of in unstructured form. So what you guys need to do is you have to using AI to analyze this form and to get the structured data. So we have the assignment. So you guys can see the assignment for this chapter is how you crawl the data, basically how you crawl the website to get the content, and how you passing this page into a structured format. That's the assignment we have, right? So I give you guys the code, and you don't have to program it, but you have to understand the code, and this is the input, this is the code. You run the code on the input, you get output. At least you have that consensus, you have that intuition of what is going on. So basically, this is an unstructured format, but once you are able to crawl this from the website, and you know how to passing them, and you will make them from unstructured to structured. So this is, and also you can see that a lot of other information are given. So you can see that the signee field, and also the patent dates, who are using this, and abstract. The abstract is also very important information you guys can use. These are the two examples. I want to go on with what other examples you have. So eventually, when people say AI, what I want to emphasize is AI is not powerful without the data. So we have to have a data to make AI powerful. And the finance and accounting industry will provide a lot of useful data. These are two examples. So let's look at the third one, loan data. That's very important and very complicated data. Like in my whole career, the loan data is most complicated one when I process them. So what is loan data about? So we take about example of syndicated loan data. So what does that mean is, let's say if someone want to borrow $200 million loans, and then when the syndicated loan means the $200 loan is too much. There's no lender can take out can lend 200 million loans because it's too risky. So what it doesn't mean is the lead arranger, the lead lender will find some buddies, and then they will chop the loan into small chunk. The lead lenders will take 40 million loans, and they give some portions to other lenders. So together they will lend out these 200 million loans. So it's called a syndicated loan data, right? This is very, very significant transaction in the capital market. And like I said, as an accounting finance major, you have to understand this transaction. You have to know what is going on, and you have to understand the data before you use AI. So I guess the purpose I'm trying to deliver here is, if you want to use AI, you have to understand this transaction first. So you can see that among the 200 million loan, we have find the leading lender. We can take the big portion, and they chop the rest of the loan to the other small lenders. Sometimes they're not small, to other lenders. And then so people pool together to issue the 200 million loans. So this is the phenomenon called the syndicated loan. And there's a lot of data on the syndicated loan, and we can work on it. And but you have to understand the transaction first before you apply AI So you have the what's concept about what does it mean by lead arranger, what do you mean by syndicated loan, and what's the floating rate. All this information you have to understand. What is revolvers, what is term loan. These are the terminology you have to understand before we go to AI. So this is the data you can get by using the loan data. So using the GPT and using Llama, you can pass in the loan report. You can get this kind of loan data. But like I said, you have to understand the terminology before you can apply the GPT. So you can see that there are two types of loans we're talking about. One is revolvers. Another one is term loan. So what is revolvers? It's like a credit card. When you borrow money from a credit card, you actually it's flexible, right? You use wherever you want to use, and you pay back. So it's kind of a short-term, very short-term, like a debt. So like a very liquid debt. Another one is term loan. Term loan has terminology, like a terms. You have to pay back in 1 year. You have to pay back in 2 years. So it's kind of mortgage. So these are the two types of loans within the syndicated loan. So you either borrow money like a credit card. I get like a $500,000 credit card line. I can use it whatever I want. Or you get a term loan. You get the money now, but you have to pay back in a year or two. It depends on the terms you assign with the lenders. So you can see that there's a lot of institutional background you need to know before AI. So, and also sometimes people are using floating rate. What does floating rate means? The interest rate sometimes can be on the floating rate, which means the interest rate may change with the basic rate. So the basic rate is determined by federal. So when federal raise the rate, and your interest rate will go up. If they decrease, it will go down. So basically, you don't get a fixed interest rate. You have the interest rate plus the base rate, and the market will decide the base rate. So all these are the terminology you have to understand before you apply AI. That's I keep emphasizing that. That's the advantage for the business scholars in order to apply AI when you understand this domain knowledge. And then you can see that we also grade the loans. So you can see that the loans have so you can see that they have sometimes they have the 5 years and the different terms, and they grade the loans. Sometimes it's risky loan, sometimes less risky loan. So we will grade the loan based on the concept. So what kind of data we can extract from get this data? So what you need to do is, this we're going to capture in the following semester. You have to go to the firm's AK finding and item 1.01 to get all this information. So like I told you guys, I was a computer science major before. Before I studied accounting finance, I would never know which data I should use. But once you study accounting, so you will know. What you can do is you have to go to AK findings and go to item 1.01 to get the data I just talking about. You can see the data. They give you what's the loan amount. They give you guys how much is the credit. They give you the basis rate of that. But more importantly, you can look at data is the more information is in the exhibit. So if you just want to pass in the information, you will never get the information I just present to you guys. So this is just abstract of this kind of information. You have to go to the exhibit. So you have to go to exhibit to get a detailed information about the loan contract. And then you pass in the loan contract to get all the information I just talking about. So in this process, what's the most important? I would told you the most important one are two things. One is the technical skills to get the data, to pass in the data. Another one is understanding of the data. So I would say 5 years ago, 6 years old, when I do this kind of exercise, it takes me some time because I have to write the code. I have to crowd the data. I have to pass in data. Passing the data is painful 5, 6 years ago. So you need a certain degree of computer science background to do this passing. But right now, things become much easier with GPT. The GPT can help you passing with much easier effort. So you can see that the data you have here 5, 6 years ago, it takes me 3 days to write the code and to passing them. But now maybe just 2 hours, 3 hours done the job. So maybe sometimes even faster with more powerful AI tools. So the point I want to make here is what is important is you have to know where you can find the data, right? So this is AK, is finding AK. How many people know AK? Ask yourself. And we have to go to item 1.01. What does item 1.01 mean? What is item 2.01? Have you have an idea about this? Which item represent what? Do you have the idea of what is AK means? If you don't have the idea, that means you don't have any advantage over computer science students. That's the point I want to deliver. So if you understand all the terminology and all the item I'm talking about, you have the edge. But you don't even know what is AK, what is item 01, and then I think you don't have any edge with computer science major. You have to understand this domain data first. And then so once you go to the data, once you get exhibit, you will pass in the data like this. You get what's company borrowing, how many lenders, and also you can get this structured. This is the what's the structure of the data, and also what's the characteristic of data, what's the yield, blah blah blah. So basically, once you go into data, you can get a lot of information, facilities, package, lenders, borrowers, and also it's a secured or unsecured. What's the grading of the loans? Is it high risk or low risk? So all this information are within the with the appendix, is the exhibit, but you have to pass them out. And then, like I said, it's much easier to passing this data out in the current age. So I also want to give another example of compensation, right? Company paid have a compensation, and the compensation is very complex data. Why it is complex? So when the company is paid, is basically they have several parts. They have this kind of basic salary. They kind of have incentive plans. They have the kind of other salaries. So basically, when a company's salaries depends on fixed pay, and based on the performance. If they perform well, they get more pays, and sometimes they have some pensions. And so these are the structure of the compensation. So if you look at this, so you can see that the payout format of the compensation is complex. So basically, they get some cash, and they get some equity, so stocks, right? The CEO get paid by cash and also by stocks. But they don't always get the stocks. The stocks payment maybe is contingent on the performance. So if they can boost the return by 20%, they will get the pay. Otherwise, they don't get the pay. So you can see that it's very complex compensation contracts for CEOs. They get a fixed pay of cash, their stock payment determined on their performance, and it's time contingent, which means what? Which means you have to deliver the performance in 1 year, 2 years, or 3 years. And then within that period, and even you get a stock, you cannot exercise it. You have to wait for a certain period before you can liquidate the stocks. So it's very, very complicated contract. Means you are not just get a fixed pay, you get a performance-based pay, and then you don't get the cash now or equity stock right now. You have to wait for a certain period in order to you can liquidate the stocks. And then for the performance, sometimes it's accounting performance, which means earnings has to beat certain number to get paid. Sometimes it's stock performance, means the stock return has to be over 10% or 20% to get paid. But nowadays, people add climate in. So if your companies produce pollution, you don't get paid. So kind of people give a lot of performance metrics, either by accounting numbers or stock returns or carbon emissions, or sometimes customer satisfaction, and sometimes a lot of metrics. So very, very complicated, very complicated. So you can see the structure of compensation is very complicated. The performance based on accounting numbers, stock return numbers, climate, blah, 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 so many stuff. So what you need to do is you can also using AI to analyze these returns. So where you get the data, you can go to proxy statement to get the full contract of CEO compensation. Again, if you don't know what is proxy statement, that means that's something you have to catch up, right? This is what I'm talking about. Like computer science students, they can easily handle this but they don't know what is proxy statement. But if you don't know what is proxy statement, you lost the institutional advantage on this data. So you need to capture that. So in the proxy statement, what you can have is you have the performance, right? You can see the performance. You can see that you can see the structure here. So if your performance is a rank is in below 25%, you get no pay. You got no bonus of that. But if you get 25% rank, you got 25% bonus and 60%. So you can see the performance, the pay of the CEO depends on their performance, depends on how much the stock ranking, they get higher pay, otherwise they get a lower pay. So you can see all this kind of data is in the proxy statement. And also, they also give you what is the peer firms. So sometimes you have to benchmark yourself with your peer firms, right? So they give you the peer firms. So you have to beat the competing firms, the peer firms, in order to get the bonus. So all these structured data, all this kind of information is actually in the proxy statement. And we will, teach you guys in the following chapters. We'll give you guys exactly how the proxy statement is structured. What's the content in the proxy statement? We'll go one by one for you, so you understand the institutional background of the proxy statement and what kind of information you can extract using AI. So these are the proxy statement, and you can see that this is another example of proxy statement. You can see that the stock price, if the company stock price is less than $42, and then there's less pay. So you can see that the performance depends on how the compensation of the CEO, the bonus part, it depends on the performance the executive delivered. So these are all important information you guys need to pay attention to. So, and then the other examples, you can see the peer group and you can see the structure. All these data are available in the proxy statement, but all we need is to understand what content's there and how to use the AI to extract them and help us to make decisions. And so you can see that. So to make unstructured data into structured, so you can break down into how much is fixed pay, how much is time contingent pay, how much is performance pay. So these are the three components, right? So performance pay is what I give you guys, right? So fixed pay is fixed pay. Time contingent pay, you have to stay in the firm for a certain period before you get the pay. So so using AI, you can get all the information to get how much is in each component, how much is the fixed pay, how much is time contingent, how much is performance. And you also can get how much is cash, how much is stock, how much is options. And then for performance, you also can break down, is this market-based performance or is it fundamental-based performance? Or you get the data from that. Using AI, you can passing them out. And also you can do the peer group. You can see who are the peer groups. So you can decompose them into all these different categories. Market, fundamental, and you can also do like who are the peer groups. Sometimes they give you the peer group. Sometimes they want your company to fight against the market. So sometimes they're two simple scenarios. So these are all the information. Once you use the proxy statement using AI, you can make unstructured data into structure like this way, okay? And it has been done manually by people, manually. Imagine that age has been gone, okay? We are now no more manual. Everything should be addition automated. So will require less manual. Things should be done in a massive scale using AI. And some thoughts for you guys, like using AI to analyze this data. What kind of question we should answer? Okay, so before you have to manually collect all the data and try to answer these questions. Now using AI, you can get all the data in a timely fashion and you can answer the questions like following. Like for example, is the CEO overpaid or not, right? This is very simple questions everyone asking. You look at all these kind of big companies' payment. Are these companies overpaid or not? Know how to answer this. You have to get all the companies' compensation and you can compare them and you can see their performance and you can see their pay, actual pay, and you can determine who are overpaid and who are not overpaid. So in order to do that, you cannot just manually check the data one by one. You have to get the 6,000 public traded company and get all the compensation, and then you do the large analysis, data analysis on their compensation contract. You can answer these questions. And should we pay by the input or output? Output is the performance, right? Should the CEO just pay by their performance or pay by time they spend for the firms? This is also a good question to ask, right? So many of you guys, you study so hard for the exams. Should I just grade on your exam score, or we also consider how much time you put in to prepare for the exam? Right now, we don't do the input base, right? We don't check how many times you spend for the exam. The reason is because it's difficult to measure. I don't know how much time you spend for the exam, but with AI, it's a different story, right? We can check how much time you put in the exam. So maybe in the future, when we evaluate individuals, we maybe use output and input. So right now, everyone is based on output, like your exam score. But in the future, we also consider how much time you put into the exam. The age may come in, maybe not now, but it will be in the future. And also, what's the metrics? Like, do you look at the cash earnings or market? So how do you choose peer firms? Look at this interesting question, right? You see, like you see, like if I choose easy one to beat, I get more compensation. If I choose the hard one to beat, I get less compensation, right? There's some strategical decision to make there. And also say on pay, how do investors like this? Investors also want to monitor CEO's compensation. How do you do that? And how do you regulate compensation? The SEC require more disclosure on the compensation. So after 2006, you will see more disclosure about the compensation contracts. So the regulators will do that as well. And also another interesting question is, do CEO paid by luck or performance? So let's say I run a company. I have huge gains for the company. Is that gain because of luck or it's because of my effort? How we do that? How we disentangle, is the pain attributable to my luck or attributable to my effort? These are all interesting questions you can ask. So with AI, once you use AI to analyze the product statement, and you can answer all these interesting questions and help investors and help Big Four and investment companies to make decisions. So